Okay.
Okay, Dennis, take it away.
Okay. Good morning, everybody, and welcome to the Kushner Report for May of 2024. This is the second month of the second quarter. We're concluding by the weekend. And at the conclusion of today's presentation, you'll all have an opportunity to participate in our question and answer session. So today I want to take a look at our key economic indicators, the global economy, the domestic economy, mergers and acquisitions, and other significant economic news, and what else is taking place during 2024. So today we're going to take a look at the oil and gas outlook, and then with the implications of AI and the oil and gas influence in the industry going forward. So first of all, let's take a look at the energy landscape for 2024. First of all, the energy landscape really continues to be shaped largely by four disruptors. We have geopolitical factors, macroeconomic factors, variables, and such as like high interest rates and rising material costs. And then we have evolving policies and regulations, and of course, the emergence of new technologies. And then we have what we call OPEC plus, which is the output cuts of about 2.5 million barrels per day that's been pushed on Brent and West Texas Intermediate oil prices, moving them upward. And the industry really is expected to have a solid start this year, and it has, in part to its strong financial position and high oil prices. And barring further deterioration in the macroeconomic environment, things should be pretty well stable throughout the year. So what does the outlook look like? Well, predicting the outlook for the oil industry in 2024 involves considering several factors. First of all, we have global economic conditions, and that is particularly the major companies that are consuming oil products, such as China, India, and the United States, and will heavily influence the gas demand throughout the world. And then we have the geopolitical tensions, conflicts, and sanctions that can really disrupt gas supplies and supply chains across the country and affect market sentiment. The Middle East can easily impact prices on a daily basis. Advances in technology such as hydraulic fracking for unconventional oil and gas extraction and renewable energy sources continue to placate the market in a positive way. And of course, the oil and gas extraction and renewable energy sources continue to reshape the oil industry. And at some point in time, we'll change the name of oil industry more toward an energy industry as we move further and further away from traditional sources of fuel. We have regulatory policies, and that is environmental regulations. You've got carbon pricing mechanisms, government initiatives really to promote and the long-term viability of the oil and gas projects. And of course, increasing awareness of climate change and efforts to mitigate carbon emissions are really driving a shift towards cleaner energy sources. And this transition may lead to reduced demand for fossil fuel in the future. And we're seeing that taking place as we speak. In the area of investments, access to capital, investor sentiment, and financial market conditions really plays a critical role in funding exploration, production, and infrastructure projects in both the oil and gas sector. And then we have supply and demand dynamics, and that is the balance between global oil supply and the demand will continue to shape prices. Factors such as OPEC plus, production decisions such as shale oil production trends, and the disruption in supply chains can really have an impact in market equilibrium going forward. And finally, we have renewable energy, and that is the expansion of renewable energy sources such as solar, wind, and battery storage may present competition for traditional oil fields. So we're seeing a lot of that taking place now. And finally, we'll have the impact of the market. So the outlook in the oil and gas industry is somewhat subject to uncertainty. And as people want to know, one in particular indicated that the concern is, why are prices dropping and yet the fuel price at the pumps are still high? And if you had the answer to that, you'd be worth a lot of money. So now let's take a look, for example, at some of the key trends. So there's really 5 key trends taking place right now, and that is we have what's traditionally called energy transition. That is prudently allocating capital and effectively executing clean policies. So the oil and gas companies are really increasing exploring for clean energy avenues because they realize The tables are changing significantly. You have internal considerations, and that is the oil and gas industry would likely focus in 2024 on one, spending money initiatives really aimed at improving operational efficiency and reducing emissions, also focusing on lower carbon fuels that are adjacent to their core or complement their primary operations. And then we have the external considerations, and that is many new clean energy policies have been adopted or proposed worldwide, including the Infrastructure Investment, the Jobs Acts, and the Inflation Reduction Act in the United States. Minerals are really critical important at this point. So growth in renewable energy is really driving a demand, if you will, for critical minerals, with lithium demanding tripling between 2017 and 2022. It's up over 70% within the last few months. Then you've got global energy trends, and that is traditionally energy flows have been driven by market forces, specifically interplay of supply and demand and the availability of storage and transportation infrastructure. Then we look at adopting technology, and that is capturing the dynamics and the harnessing of generative AI and creating new values. So the oil industry really has been at the forefront of adopting cutting edge technologies to bolster operational efficiency, curtailing costs, if you will, and advanced safety and sustainability measures. And in recent years, artificial intelligence is now emerging as a major player in transforming the industry overall. So when you look at the landscape of the future, the focal point at this point is reducing cost, improving overall operating efficiency, increasing revenue, and at the same time, rapidly expanding innovation and solutions to look for other alternative solutions for where we go forward. And then you look at restructuring and refining the industry. And on a global basis, oil demand is projected to slow down in the long term, and the industry could impact the future with new capabilities and distinct categories such as, but not limited to, for example, biofuels, hydrogen and ammonia, electric vehicles, chemicals, and also carbon capture, usage, and storage. So what can the industry expect in 2024? Well, given the healthy cash flows, robust financial health, and sustained capital discipline, and of course, rapid technology progress in the industry, oil and gas companies seem relatively well positioned to increase focus on energy transition in 2024. So this is going to be a year where we're going to see substantial changes going forward. So now, what is the AI implications with oil and gas? So first of all, in 2024, the impact of AI on U.S. oil and gas industry is really likely to be substantial, influencing various aspects of exploration, production, refinery, and of course, distribution. So you have exploration and optimization. That is, AI is increasingly being used to analyze seismic data and identify potential drilling sites more accurately. We're looking at AI can also provide advanced reservoir modeling and simulation capabilities. We also see AI-powered systems can enhance safety by predicting and preventing accidents in hazardous environments. AI-driven analytics can also optimize supply chain operations, indicating and including transportation, storage, and distribution. And of course, we have AI applications, which is optimizing refining processes to increase throughput, reduce energy consumption, and also improve product quality. And finally, we have marketing analytics and the trending. And that is AI is powered, predicting analytics can help oil and gas companies basically make informed decisions regarding pricing, trading, and investment strategies. So overall, if you will, in summary, AI is really expected to be revolutionize the oil and gas industry by driving efficiency, improving safety, and enabling companies to make data-driven decisions across the value chain. However, it's important to address challenges that we face going forward, such as data quality, cybersecurity, which is a major threat, and also workforce readiness to really fully harness the potential of the AI sector. So that kind of gives you a synopsis of what's taking place in the oil industry. A lot of dynamics. Now let's take a look at our key economic indicators today. We're going to look at the gross domestic product, inflation, unemployment at both the federal and the California level, and then the price per barrel of oil. So if you take a look at the global GDP for 2024, there was another revision globally. It went out around 3%, and it's predicted to go down to about 2.8% as the slowing economy continues. We look at the United States economy. We went out the end of the year around 2.6. Projections are so far this year to go out about 2%. And again, that predicts the slowing down of the economy. If we look at inflation in 2024, it went out about 3.2%. And expectations are that we should see it around 2.5 this year. Right now, we're still running around 3.3, 3.4 as we go to the mid part of the year. So they're struggling trying to get that data down. I'll talk more about that as we go further in the conversation. On the unemployment side, the end of the year, we went out around 3.9 across the country, and it's projected to go up to about 4% this year. You look at the state of California, we went out at 5.1%, and projections are to drop down to about 3.9. The range on the price per barrel of oil is around $80 to $100, and it's fluctuating all over. And as we talk about later, we're somewhere around, I think it closed yesterday, was about $79.86. So it's just under the $80 range. And it's hard to tell when that's going to continue to change. It's been up and down all year. You may recall early in the year was well over 80, almost $90 a barrel. So what's taking place globally? Well, the European growth is gradually recovering, and the Eurozone is showing some signs of improvement. GDP basically was up to about 2.7% year over year, so they're really having a stellar year going forward. And the Bank of England basically has decided to hold their rates at this time. That's going to continue right now, as inflation is still an issue within their organization. So rates there are around about 5.25%. Norway is the same situation. They're holding rates at 4.5%. Again, inflation risks continue to placate the environment for them. And then we look at China. And as you know, that China's had a lot of problems with real estate, among other things. So Beijing is removing the floor on mortgage rates, lowering down payments. And then China is also providing $42 billion of cheap funding to buy unsold homes. And so new home values have really declined by 0.5%. And also we saw the same thing declining with new home prices as well. So China's taking an active role in trying to correct the problems that they have within the real estate industry. Now, looking at the domestic economy, the surprise for the first quarter of this year was down to 1.6% projection for the first quarter of the year. And that was really the projection was to be about 2.4%. So they missed that substantially. And we have one more month, the month of June, to take a look at what the impact is going to be for the second half of the year. Looking at inflation again, stubborn as it will be, the price is still staying high and the shift is staying there. And again, Powell talked about delaying interest rate cuts. And many feel that the interest rates, we won't see anything happening maybe as early as September, possibly not even until we get into December. Again, with inflation still hovering at over 3%, there's some real concerns by the Federal Reserve. And the Open Market Committee met again, and they just decided to postpone everything and not make any changes at all. Now, an interesting thing cropped up is the United States has revoked Intel and Qualcomm licenses to selling to China. And that's because there's some serious issues going on there, and it's tightening up the restrictions against the Chinese telecom equipment maker. And as I mentioned earlier, with inflation, prices were up again by 3.4% over the last 12 months. That's down from the 3.5 that we saw in the month of March. Again, we saw a little bit of lower food prices, a little bit of lower automobile prices, but not enough to make a dent. And again, the Federal Reserve indicated the central bank should continue borrowing costs for a longer period of time until there's more evidence that inflation is really easing. Many believe that the 2.0 target, if you will, is possibly not even realistic. And they may want to go back and rethink that, whether we'll ever get to 2%. Perhaps that's going to change. Maybe it'll be 2.5. It's hard to tell at this point. The wholesale inflation factor, unfortunately, rose 0.5 of a point last month, which is not good. And those prices continue to surge. In the area of trade exports, exports were down $5 billion last month. We closed out around $258 billion in the month of February. And imports were also down by about $5 billion, and that was in the February market. So both of those indicators were down. When we take a look at retail sales last month, essentially they were really unchanged from March. We didn't see a lot. And again, inflation and interest rates are really curbing a lot of spending. We're seeing that slowing down now across the board. Now let's take a look at the job picture. So as you know, we were running around 250 to 275, 300,000 per month. Well, this is the first month where we've seen a substantial decline. So now what's transpired is we had 175,000 new positions in the month of April, and unemployment again increased to 3.9%. If you look at the sectors, the real key is business and professional services, construction, and also in information services, along with mining, all had negative figures for the month. What's interesting is health and education and leisure and hospitality continues to see growth. And here we saw 8,000 new jobs created by the government. But it's down lower. And again, the Federal Reserve would like to see those numbers even lower than we see right now in this chart. Now we take a look at the state of California. For the first time in a long time, we had very, very anemic growth. We only had 5,200 jobs created in the month of April, and unemployment still remained at 5.3%. But if you look at the sectors, you look at administration, construction, IT, which is information, manufacturing, and other, and also professional services, all had negative growth during the month. And healthcare was up a little bit, but in general, it was a pretty flat market for growth in the month of April. And as you know, as people getting out of school now in May and June, the employment picture for college graduates, they said, is the worst in several years. So that's taking place now. They're feeling that as these kids are getting out of college, deciding to go into the job market. And as again I mentioned earlier, if we look at the interest rates, universally they're staying a range between 5.25 and 5.50. Powell does not want to discuss raising interest rates, what could be an option later in the year if we don't see an impact in the reduction of inflation. So we'll have to wait to see how that takes place. In the area of mortgage rates, good news here, not for first-time buyers, but in general, it's been going down. With the average rate, the latter part of May was around 6.57%. So it's down from the 7.5 that we saw a month ago. So mortgage rates are coming down a little bit, which is good news. Now in the manufacturing sector, unfortunately, we saw another drop below 50 basis points. So now we're back in the mode of below 50, which indicates a contraction taking place in manufacturing. So it's going in a different direction. And it's got to be above that 50 basis points to be even stronger. And it's been modeling in that area now for the last several months. When we take a look at factory orders, they're up for the two consecutive months in a row, increased by $9 billion, which is good. That's healthy for that sector. Small business confidence level climbed up about 1.2%. It's now at around 89.7 in the month of April. And to be honest with you, this is still the lowest level since 2012. So we're talking below the 100 mark, almost back to 2012. So the market is substantially lower for that particular element. When we look at consumer confidence, confidence fell again last month for the third time in a row. It dropped to 97, again below the 100 target number. So again, consumer spending is concerned about consumers going forward. I mentioned crude oil prices. Last month in April, before we got into April, it was $86.57 a barrel, and it closed down yesterday around $79.83. So it's down about $7 a barrel, and hopefully it'll continue that way. There's plenty of fuel out there, and we haven't heard too much about factories going down for maintenance at this point. So that's good news. And we'll get some more data about how much mileage and gasoline was used during the 3-day holiday we had probably in the next couple of weeks. Now, in the housing market, we're starting to see some good news here. So total housing for new homes was up by 5.7% in April, and that's the highest growth rate we've seen in a long time. So you're seeing that taking place now with new housing starts. When we look at new home sales, although they dropped 4.7% nationally, we have good news in the state of California. Keep in mind, some of the prices taking place around the country in certain states such as Colorado, Arizona, and others are seeing some prices declining in their markets. So let's take a look at Southern California. If we look at Los Angeles County, for example, The medium home price for those that are on the market was around 826,000, and that increased by just under 3%. Sales were up just about 12% for March and up 9% in the same time frame for April of 2023. Orange County, which is the strongest part of the state, we saw the median price rose to 1,440,000. That increased about 3% in April, and sales were up almost 17% from March. And of course, if you look at last year, April of 23, it's up by almost 25%. So Orange County is doing well with the inventory that's available in the marketplace. When we look at San Diego County, the average selling price continues to increase. It's now 1,047,000, which is pretty high for San Diego, especially when months ago we were in the 850 to 900 range. Again, this is based on the inventory that's on the market. So sales were up by 2.7% during the month, and we saw from last March they were up by 7.5%, and then they were up almost 9% from April of 2023. Now, looking at existing homes, it's a second consecutive decline. It was down by 1.9%. The slump continues in a lot of the single-family homes, condominiums, and townhouses. But again, it's done on a regional basis. So there are places in the country where things are moving forward and other places that are retracting. But overall, it was down by 1.9% for the month. When we look at construction spending, we saw a decline in construction spending in the month of March. It was down lower this month than it has been in the last couple of months. Productivity came out, and we saw a positive at this point for the first quarter. It was up by 0.3 of a point. And the Bureau of Labor also increased. They said the increase in hours being worked by 1.3%. That's really critical, the hours being worked and hourly workers in terms of getting back into the marketplace. So those are critical. Now, the one area that's always of concern is what I call company displacements. Last month, we had a good month with very few. This month, we saw a lot of activity. So, for example, I take a look at the companies that were somewhere in excess of 1,000 employees on a basis of that nature. So, first of all, if you look, we had Tesla, we had another 6,000. We had a company called Whirlpool, 1,000. Sun Power, 1,000. Bristol Myers, 2,000. Southwest Airlines, 2,000. Textron, 1,500. National Aerospace, 1,700. And Indeed, 1,000. And then we saw Mirage Casino is closing to go through a refurbishment and a new renovation. That's 3,000 jobs are lost there. And of course, TikTok lost 1,000. So I think from that perspective, that's kind of where we saw some of the companies restructuring with their employment processes. Now let's take a look at mergers and acquisitions. The month was very strong in spite of the rates of interest rates. A lot of activity taking place, still a lot of consolidation taking place in certain vertical markets. Now, if you look at IBM, they were very active last month. They bought this company called HashiCorp for $6.45 billion. And what they're doing is they're expanding its cloud-based software products to tap into the AI-powered boom in the demand. So they're moving full speed ahead in that. NVIDIA did an acquisition for $700 million. And basically, this is the orchestration of more software incorporated into their product lines. And Resideo is acquiring what they call Snap One for $1.4 billion. And it's a strong position in security products as they're moving more into that marketplace. UMB Financial is acquiring Heartland Financial for $2 billion. You're seeing another consolidation again in some of the financial services markets. Thoma Bravo is acquiring Darktrace, and this is a reshaping the cybersecurity landscape. Now it's its intention to acquire this and expand their business portfolio. And of course, Quantico Phillips, this has been going on for quite a while. The deal is finally closing at $11.5 billion. What's interesting is T-Mobile is becoming very active. They just completed a deal buying Mint Mobile for $1.3 billion. Again, they want to expand their basis and take a more active role in the telecom space. And then we have Rocket Software, their acquisition. Basically, it's offering to modernize software solutions, really expanding the mainframe to the cloud. And that's the whole movement in that particular area. When we look at Uber, if you're familiar with Uber bought a company called Delivery Heroes Food Panda business. It's a delivery basis company that's in Taiwan for $950 million, and that was an all-cash deal. So what other activities are taking place? A lot of things occurred last month. What's really interesting is Larry Ellison moved his world headquarters from Silicon Valley in the Bay Area to Austin, Texas, not too long ago, and he's now decided he's moving his corporate offices to to be world headquarters in Nashville, Tennessee. And his feelings are, he said he wants to position the company to be one of the major players in the healthcare industry, and Oracle is moving forward, looking to expand its position. So they're moving to Nashville, Tennessee. As you know, Hertz has been struggling. They're getting rid of selling another 10,000 more electric vehicles, sustaining more larger losses. Overall, they've eliminated 30,000 electronic vehicles. And basically, the cost for them was staggering. They lost something like $195 million for cost for the whole investment that they made. Now, this is an interesting thing here. There are three late signs reveal that the EV market basically is not catching on in the country as expected. So first of all, the big push by the administration was to continue to push electric vehicles over the next 20 to 25 years. First of all, Tesla has faced struggles, with the automaker announcing last month that it would lay off about 10% of its global workforce. And one of the biggest downgrades of electric vehicles has been concerns over the availability of charging stations and locations for parts of the country, and the slowing down of the supercharge network, which is the largest in the country. You look at Ford Motor Company, basically, they're struggling. They announced that they lost $1.3 billion in electric vehicles in the first quarter of 2024. And then you have what we call the government administration. And what their role is, they've loosened restrictions on electric vehicles with vehicle credits, and to allow automakers to rely on some Chinese materials and still qualify. So we're seeing that taking place. Those are three elements that are affecting the current market for electric vehicles. Now, we talked a little bit about Red Lobster last month. They've officially filed Chapter 11 reorganization to see whether or not they can keep the company alive. There were approximately 4 in San Diego County, and one near us closed about a month or two ago. When we look at Apple, the company is doing a Mac grade chips and data centers for fall launch, and the offers features using an on-device and cloud approaches to do more with their technology products. And Apple, if you will, Walmart will close all of its healthcare clinics. They moved in that marketplace some time ago, and according to them, it's not working, and they've decided to close them all immediately. And again, Walmart is launching a new product line. There's about 300 new lines of items that are going to include frozen foods, dairy products, snacks, beverages, soups, etc. And they want to take more of an active role in coming out with their own more product lines to compete in the marketplace with everyone else. Now, there's a company in New York City for any of the folks that are on the call today. It's called National Music Store Chain, Sam Ash Music. They're closing all their locations. They've been around for decades. You look at them, they sell all kinds of musical instruments, guitars, you name it. And unfortunately, they're closing. That's the end of an era, if you will, with all those instruments and so forth that is taking place. It's kind of a sad day for that. Now, if you'd like to have Chevrolets, well, Chevrolet's announced they're ending the production of the Malibu, and they're going to focus that effort, if you will, on the electronic vehicles. So Malibu will go away as soon as the last lines are completing their production. In the state of California, our governor, Newsom, because we have a major deficit going into the 2025 timeframe, is eliminating 10,000 vacant positions right now, and there may be more forthcoming. And Ford Motor Company basically has announced that they're cutting their battery orders. The electric basically it's exceeded almost $100,000 a car, so they're cutting that whole process out. And of course, Microsoft announced new PCs, all AI chips from Qualcomm. So that's good news for Qualcomm, which is a San Diego-based company. And those of you familiar with DuPont, which is a household name, they've decided they can be more effective and make more money by breaking the company into 3 companies and keeping all 3 public. And that's the process that's going through right now. So they're going to break that up. They're going to do the same thing as General Electric did not too long ago. So there's a lot of activity taking place as the economy continues to change. So what we're going to do now is we're going to open up for Q&A.
Hey, Tim.